Hello, and welcome to the Liquidity Event. We're your hosts, AJ.
And John, pinch hitting once again for Shane Mason.
This is episode 74, being recorded on December 21st, airing on December 30th. Goodbye,
Yes.
2022. Au revoir, Shoshana.
Yes, let's see how they turn this into sunglasses. How they turn 2022 into glasses for tomorrow night.
Oh, yeah. Not good. What, do you have New Year's plans? A week out?
I do. House party. What about you?
Same. Yeah, party in the
Not
USA.
going out.
Yeah, no driving. No driving on New Year's is my rule. Let's see, what do we have today? We're going to do like a year in review. We're going to look at the IPO market. We're going to look at the general stock market. It sucks. Spoiler alert. We'll talk a little bit about crypto because we have to. And John and I are going to talk about our New Year's financial resolutions. So we've got a great show for you. What's up, John? How you doing?
Gearing up for the holidays. I know it's kind of weird to say that. We're recording this before Christmas, before the holidays airing, so we don't have to come on and work over the break, and so our podcast editors don't have to either. But
wait, you don't want to hang out with me on Christmas Eve? Boo.
What's that?
You don't want to record a podcast with me on Christmas Eve? Whatever.
Normally, AG and I spend our holiday breaks cranking out continuing education credits that are due by the time the ball drops on New Year's Eve. But I got mine done yesterday, so I'm ahead of you. How are you doing?
I'm okay. Actually, I'm not in as bad shape as I have been in prior years. I anticipate panic on the 26th, not the 31st, which is doing very well for me.
Wow.
I see that you invited me to a summer party where we sit in the beautiful sunshine.
I did. It's a funny story. Should we tell them the story about I first started working at Brooklyn FI?
You guys.
AJ is during COVID.
This is harassment.
Okay. AJ hadn't done her CE for one of her designations, and I called her up.
Wait, sorry, back up. What is CE? CE is continuing education. So when you have a lot of designations, it's not just passing a test and doing your job. It's you have to take quizzes and you have to go to conferences and you have to stay up to date. Just like a doctor has to read medical textbooks. Same thing for financial planners, tax professionals. Anyway.
Exactly. So AJ was traveling and apparently not doing her CE and tells me about it in our one-on-one. And we were changing our phone system here at Brooklyn FI. And so I had a new phone number for my office and I needed to test it out. So I decided to call AJ from this number she didn't know, telling her I was, from one of these credentialing boards and that her account was, in arrears. She was behind on her CE and she got all, I'm so sorry, I was just traveling. I was going to call you guys about this today. I'm like, AJ, it's John.
You got me so good. You got me so good. Because they sent me a letter and the letter said like second notice because I hadn't been in town. So like, as a friend, I told you that in confidence and you used it against me to break me, which is typical of the treatment that I get around here. Anyway, let's look at the year and how are the IPO markets this year on a scale of 1 to 10?
Not so great. Not so hot in the IPO market, and a huge juxtaposition compared to last year. The IPO market last year, SPACs were going crazy. Everybody and their brother was going public. This year, not the case at all. A mere fraction of the activity. AJ, you got some stats here that are just kind of mind-boggling. You want to share?
Yeah, the stats are crazy. Cool, thanks. Had to get my stats from.
Are you buffering here? What's going on?
Okay, so the data is pretty stunning, right? When we think about IPOs going public, we think about companies going public, we think about massive corporations raising millions or billions of dollars to have funds to continue to grow their businesses, right? That's the reason you go public is because you need money to invest back in your business to expand, right? So
correct, and to provide your employees with liquidity and your shareholders with liquidity, potentially.
Sure.
Liquidity podcast. I feel like I kind of had to sprinkle that in.
We talked about this last week. It's fine, or on yesterday. So what's most stunning to me is that the total amount of money raised in 2022 for U.S. IPOs was $7.7 billion, which is like literally nothing. That is nothing. That is stunningly small because in 2021 it was 142 billion, which was a record year, right? Like 2021 was a huge year. Was insane. But we're used to seeing $100 billion or $70 billion, not 7 and change. This is it felt slow, and the numbers show us that it was indeed quite slow. So if your company hasn't gone public, This is why. We just had everyone's scared, right? We had a war in the Ukraine breakout early in the year, inflation, fears of a recession, political turmoil across the globe. Companies are scared to go public, right?
Yeah, and I think like the question is like, when are we going to get back to normal, and what does normal look like? And I ran some numbers. I looked through. Renaissance Capital has a great article on this that we used to pull this data, and I went back. I'm like, let's go back to normal times. And I define like 2015 to 2019 as relatively normal times. Generally speaking, economic expansion. You're not really in a recession. Politically maybe not normal times, but nonetheless, average proceeds per year were about $35 billion. From 2015 to 2019, that 5-year period, average deals were about 158 deals per year. We did set, $8 billion this year? So about 1/5 of the proceeds this year, and less than half the number of deals on average. And so 2022 was not a normal year, and clawing back up to a quote unquote like pre-pandemic average of IPO activity is still a rapid expansion in terms of money raised and a doubling of deal activity.
Yep.
And I think there's the potential to get back there. I don't see it necessarily first half of 2023, but if things get a little bit clearer, I think people are getting antsy. I'm not making predictions on this podcast.
No, I agree with you, right? Like there are a lot of companies that really need to go public at this point. A lot of companies promised us at the end of 2021 that they were going public in 2022, and a lot of companies either filed to go public and pulled back, or just are keeping their cards close to their chest a little bit longer. The Outlook show, there's a bunch of different analysts. Outlook shows that we'll start to see bigger IPOs trickle in early in the year, but we should get back up to those, what you defined as normal. So yeah, just for some perspective, quote unquote, in 2022, there have been 71 IPOs on the US market. In 2021, there were 397, which was a banner year. 2020 was 221, 162. So what I find interesting is, let's go back to 2008, right? Big bad recession, great recession, financial crisis. There were 31 IPOs that year, right? Which is very low. So there have been more this year. However,
we more than doubled that this year.
With 71. However, in 2008, the total amount raised from IPOs was $24.5 billion. So it's almost more than 3x what we've raised this year. So pretty dramatic.
Basically, if you were on pace to have this huge valuation and go public this year, I'm going to throw a name out. Let's say you're Stripe, right? Like a bigger name that people are talking about. When are they going to go public? You held off because the bigger that valuation is in this down market, the more of a hit you're going to take. You don't want to do that. Yeah. And so it kind of makes sense logically. But at some point, I think people are going to get antsy. And I think there is still some dry powder around, at least at some places that are interested in IPOs and people who want liquidity.
Yeah. And, there was... of those 71 IPOs, many of them were what we call nano cap companies. How many times did you hear us on this? If you're a long-time listener, Shane and I would get on here and go, well, we've got this. But thank you. Yes, thank you, John. For those who do listen, we've got this hemp manufacturer in California going public, trying to raise $8 million. That is, sure, technically it's an IPO, but in the scheme of things, that 71 number is even misleadingly large, because a lot of these companies raise so little. In fact, the median deal size, meaning like what were most of these IPOs happening, was a multi-decade low of $20 million, right? So typically we see IPOs with hundreds of $1 millions. It's not worth the expense and the cost to go public if you're only trying to raise a couple $1 million. Just go get some, Series D money and call it a day. Easier said than done, of course. That was a little glib.
Easier said than done.
Yeah, that was a little glib. Sorry, folks.
Check your privilege, AJ.
Check my IPO privilege. You guys just go raise Series D. Whatevs. No big deal.
Yeah.
Oh, when do you guys meet Tax Bimbo? You're gonna love her. This is the slowest year for IPOs in over 3 decades. How you doing, John?
Yeah.
Are you okay?
Well, here's the thing. Like, this isn't a Brooklyn FI year in review, but I'm just really excited, as a firm that focuses on people in tech and with IPOs, how we've been able to continue to grow despite the fact that our niche client and our niche market did not have a banner year. Yeah. And,
that's an understatement. Worst year in 3 decades. Sorry, I just want to clarify.
Yes, exactly. Niches get stitches in recessions is the term.
And for some context, John is literally 3 decades old. So this is...
Yeah, exactly. In my lifetime. Exactly. Wow. When you say that I'm 3 decades, it makes me feel older than I am. But if we look at forward-looking returns in the stock market, when we've had, like a record low, it tends to be pretty good.
Yeah.
Hoping that a similar theme happens in the IPO market. I will be very honest. I don't want the IPO market to go back to what it was in 2021. 2021 was insane.
Oh, really?
Yeah, it was insane. It was irrational. Anybody and their brother could go public via SPAC. Yeah. And I think
it was harmful.
That the quality of the companies going public, decreased dramatically, even from 2020 to 2021. And they paid a price for it this year in their stock price. And a lot of people, we've seen it, clients, other folks get burned because of that stock price drop. The Renaissance Capital IPO index down 54% this year.
Right. So who wins? That's rough. The venture capital and the institutional investors, the accredited investors, especially with SPACs, those folks who got in early on, who are basically guaranteed to get a return on their investment at when there's a public liquidity event. Those are the people that win when we have so many IPOs that are maybe overpriced or maybe shouldn't have gone public or, needed more sales data or more years to show, or even a path to profitability, right? We're seeing that with pretty huge IPOs, right? Like Coinbase is, in terms of the stock price, is very far off of its IPO price. And in my opinion, it was too early for them to go public, right? They went public at this moment and then the stock completely fell off a cliff, right?
But if you look back and you think about it, if you're somebody inside Coinbase and you're debating whether to go public and crypto is going bananas and people are trading like crazy, like now would certainly not be a better time for Coinbase to go public. So yes, in theory, you wipe out all that value, but that was when the market was hot, right? You give the ball to the guy with the hot hand.
Is that basketball?
Yeah. Thank you.
I'll take that win, put it in the old cap feather situation. Anything else on IPOs?
No. I was just going to start talking about the general market and what happened this year, because it wasn't just the IPO market that was decimated. It was across the board. Most asset classes are on pace to finish down. Like I said, there's 10 days left in the year. Maybe we get this crazy Santa Claus rally where AJ and I need to log on.
Yes.
Log on here, reshoot the podcast, because the market has just gone gangbusters from here at 5:00 on December 21st until the end of the year. And this is all BS and doesn't matter anymore. And if that happens, I'll gladly log back on. But odds are it probably won't. And so when we look across the board, tough year for most asset classes. The only thing that really made money this year was commodities and I bonds. Want to just drop that one in there. I got
every time you say the word I bond, you owe me $20. And I'm not contributing my profits to I bonds.
Okay, $20 is nothing compared to the interest I've made on my I bonds this year, just to be clear. But yeah, commodities up about 15% on the year. Obviously, supply chain crunch, oil, that sort of thing. But most major asset classes down on the year. Real estate in the worst performing spot down about 25%. Small cap stocks down about 22%. Emerging markets down about 20%. Even fixed income, though, down 12% because of the rising interest rates. And so there was no really safe haven. And if you say, hey, cash was my safe haven, I call BS on that, because interest rates have only started to creep up, but inflation was at 9% at point times this year. And so unless you had the oil and I bond portfolio, you probably didn't make much money this year. You probably lost money. And if you had the oil and I bond portfolio, you probably lost money the last several years for the most part. So it's not like it's anything too right.
So you look like a genius, but you're actually well behind everybody else. I mean,
even a broken clock's right twice a day.
Exactly. What did we I was just thinking, during a year like this, very few IPOs, no tech IPOs, or no great tech IPOs, interest rates way up. Not a great time to buy a house. Not a great time to invest in the stock market. It was a bad year from a financial perspective, right? But to your point earlier, not to pat ourselves on the back, but Brooklyn FI, it was market conditions didn't impact the good work we did. That's the point of financial planning is when times are good, anyone can make money in the stock market, right? It's it only goes up and to the right. Congratulations, the past 10 years have been great for everyone. What happens when shit hits the fan? Or what happens when the circumstances change or things don't behave in the way that they have in your short-term memory? Right? A lot of new investors have only been investing for, 5 or 6 years while the stock market's been doing really well. This is the first time we saw, a little bit in the start of the pandemic in 2020. This is the first time we saw that correction sustain itself, right? And it was scary for a lot of people. Like, I think a lot of I think what we've learned this year, John, is like when there are no IPOs and when it's just like how to wait, how to be a patient investor, how to slowly build wealth. Like there's this, we've got Robinhood, you're able to log in and trade stocks instantly. Bitcoin is trading 24 hours a day. It's like this constant, like, you got to make a decision. But at the end of the day, like, I think we all need to make fewer financial decisions and just hold on to our hats and be smart about having enough cash to sustain ourselves through job losses and market conditions beyond our control. But like, just to be able to be calm. I think you wrote a blog post about this, like, how to stay calm through the storm.
Yeah. And I think looking back at 2022, it was really about making lemonade out of lemons and being mindful of the fact that like situations are changing rapidly. We need to change our exercise strategy. We need to do tax loss harvesting. We need to make sure your portfolio stays on target. And like, it really helped though, like, I don't know, like when I go back to like January, February 2021, when meme stock mania is happening, and like I'm an idiot because the diversified portfolio that I want to put you in, like in a really good year, might be up like in the teens, and you can make hundreds of thousands of dollars overnight trading GameStop. Like that's not a fun conversation to have, to kind of push back on and struggle with, because it's like anybody and their brother could have made money in 2021 in the market. The question is, in 2022, when nobody made any money, and somebody who did make money in 2022 probably didn't make money in other years, how did you take advantage of it? How did you make sure that your plan stayed on track?
How did you stay sane, right? Like I think it was a really difficult year for a lot of our clients because a lot of our clients had a lot of equity at these companies that are 30, 40, 50, 70% off their IPO prices. Like, how do you go from that roller coaster of being, hey, my company went public, I have this euphoria, I'm going to buy a house, I'm set for life, I'm going to retire in 10 years, to, oh, that $10 million is now $2 million. Like how do you go through that roller coaster, stay sane, sell a little bit, of course, but also know that you're in it for the long haul, right? And we don't need to make decisions to try to chase the dragon of short-term stock market returns today, right? That's not how you build real wealth long term. Some people are great. Some people are lucky and play the market well and do well. And I applaud those people, but that is not the norm. And I think a lot of people forget that and lose that perspective.
Mm-hmm. And I think like looking at the Renaissance Capital IPO index and seeing that it's down 54% through the middle of December, like, there's your sign. There really isn't a free lunch. And, I think the wonderful thing about the market sell-off, and I know it's hard on everyone, I know it's especially hard on people who were counting on liquidity or, had to change their plans drastically. Don't get me wrong, but the wonderful thing about a market sell-off, if you are a listener to the Liquidity event, you are a little bit younger and you have a longer-term perspective, like the nice thing about that is that, longer-term, investment returns look better now than they did 12 months ago when you and I actually hosted this year-end episode last year.
Yeah.
And, it was a very different time and things were a lot higher.
On a personal level, John, are you thumbs up or thumbs down on where you were this time last year?
Started from the bottom, now we're here. Could only go up from where I was at this time last year, so we'll take it.
Just checking in. I kind of wanted to do like a year in review. I have some like funny prompts here. Not funny, just like what happened in 2022. I
shaved my beard.
Oh yeah, you shaved your beard. You ran the marathon. That was huge.
I ran a marathon, a couple halves.
Yeah, that's great.
Thank you.
For you.
What about you, AJ? You still have bangs?
I still have bangs.
No major.
I learned how to play golf. That was a big win for me. I'm actually pretty good according to my new instructor, and I'm not. And I didn't think that. And
AJ fired all her old instructors until somebody found some.
Tell me that I'm good enough. There's video evidence. Anyway, no, that was good for me. I needed it's hard for me to play sports, so I needed a thing to get me outside and active. So that was a big personal win.
You work in finance. I mean, it makes sense.
Yeah, it makes sense, right? Except the people I play golf with all work in music, which is a step backwards. But anyway, all right. So that's personal stuff. All right. So let's do worst scam of 2022. Let's do biggest I told you so of 2022. Let's do best right place, right time. Let's do best last laugh, and let's close out the episode with our New Year's financial resolutions. Not, well, maybe personal ones,
Got
but
it.
also just recommendations. All right. Worst scam
Yeah.
of 2022. This is an easy one.
Sam Bankman-Fried,
Yeah,
FTX. Come on. Scam of the decade, maybe.
Yeah.
Biggest scam since Madoff, right?
Yep.
I mean,
yeah, we got the report from the prosecutors that basically what as more gets revealed, it seems like this was fraud from day one. It wasn't just like, oops, it got too big and now it's too big to fail. It was premeditated. Hey, I'm going to use these customer funds to execute my Bitcoin pricing arbitrage over here and hope nobody notices.
you always get caught.
You always get caught.
And it's always wire fraud.
And it's always wire fraud. That's true. All right, biggest, I told you so.
Ooh, what do you got? You want to go first?
Yeah, this is hard. I don't like this. I don't know why I didn't want to do this. I think the biggest I told you
You're
so.
the one who picked this topic.
I know. I think
Pounding your
biggest I
chest
told
over
you
here.
so would be these big splashy IPOs, like you were talking about earlier, John, like these 2021 IPOs where the people who got screwed were the employees, right? It was a company goes public, employees are locked up, they can't sell. And then 6 months later, stock price starts to fall. They don't want to sell because they don't like it because it's 10%,
Anchored.
20% off. They're anchored to that IPO price. And, I hate it. Like, we got to sell. You got to diversify. You got to move. This is definitely an I told you so. When your company goes public, you got to diversify. Not all of it on day one. Although some of you, I wish you would do that. But that's okay. A slow, measured, tax-efficient diversification strategy. So that's my I told you so.
Yeah, mine is very similar to that. And I was thinking back to this time last year and some of the client emails I got towards the end of their trading windows in Q4 where the tech sell-off was starting. And so your stock price might have been $27 a share. Now it's at 18, 19, 20. And so a few of those clients I met with recently and looked at their stuff, and they sold at $18 or $20 a share last year. Their stock's trading at $7 right now. And so I did highlight the recommendation, not to beat my chest, but I was just like, wow, I'm really glad we sold when we did. Even though it didn't feel good at the time, it feels great now in hindsight. And so I'll take that one. I pat myself on the back there.
All right, best right place at the right time. Who won this year?
Those people who got mortgages at 2.75% in January.
Yeah.
Losers.
I know.
Should rent. Anyway. What about you?
I'm going to say best right place, right time. Michael Lewis, the author, hanging out with Sam Bankman-Fried the 6 weeks before all this shit went down. Like, I cannot wait for the book and the movie. I hope they crash that book to publication and make that movie at the same time. Talk about place, right time.
I want to know who Michael Lewis is hanging out with next, so I can steer my money away from it.
So you can short the.
So I can big short that.
Yeah.
That's what I'd like to know.
All right, best last laugh.
I'd say the best last laugh this year. You're a Twitter shareholder who got paid out $54.20 for your stock in cash because Elon didn't have good enough attorneys when he drafted his deal and he was going to be forced to buy it anyway. And now you get to laugh all the way to the bank and watch the dumpster fire from afar.
Mm-hmm. Yeah, it'll come back. My prediction is they'll figure it out at Twitter. It won't be with him in charge, but they'll figure it out.
He did ask, he was trying to hire a new CEO. So if I'm not back on the podcast, I think...
You know what, John? If you left to go be the Twitter CEO, I would wish you have my blessing.
I don't want to work for Elon Musk, to be clear.
My last laugh is Dogecoin, which currently has a larger market cap than Coinbase, which is cool. So if you bought some Dogecoin as a joke in 2017, you're able to sell now, and you're not thinking of
and your money wasn't, you didn't custody your assets at FTX,
and you didn't have your assets. Oh my God, I'm sorry. This is awful. I feel bad for you. I feel bad. I hate this story, even though it's very juicy to talk about. Okay. New Year's financial resolutions.
Yeah.
What's one that you're going to do? What's a personal one?
I already do this, but I'm going to continue to do it. I'm going to track my spending, and I'm going to track it for 1 month, and try to, be more diligent about it. I think I've done this with time. I've done this with food. When you actually are meticulous about what are you spending money on, or what are you spending your time on, or, how you're prioritizing things, you just notice different patterns. You're able to become more efficient. And so I don't recommend people tracking every single cent they spend, unless you're a freak like me. But I do see a great opportunity to really kind of understand where your money goes. If that's a financial resolution, cash flow is king at the end of the day.
That's true. Yeah. My husband and I were just talking about this last night about I was like, I just feel recently I was spending a lot of money.
On your anniversary, on your wedding anniversary, you were talking about budgeting together?
Which is my next financial resolution recommendation. Yeah, we talk about money all the time. It's an open conversation constantly. And I was just kind of, we were having a very nice, expensive anniversary dinner. And I was like, this is so great. This is amazing. I'm so grateful. There were flowers. He's the best. But at the end of the day, I was like, it feels really powerful to know that if we had to live on much, much less, we could, right? To know that there you have the ability, if you're a renter or if your housing payment isn't so large, you could have the ability to turn it all off, reduce your lifestyle and still be happy and still lead a fulfilling life. I think, unfortunately, in 2022, there's this tendency to be I have gotten to a point where I have 2 houses and I have childcare and I have 4 car payments and I have all of these things that are really hard to untangle. And actually, it would be really difficult to reduce your spending if you had to. So that's something I think about a lot. What else you got?
Absolutely.
Oh, I've got one. Just roll over your stupid 401ks. If you have 401ks lying out there in the abyss, roll them over in January. I just get it done so you don't have to think about it for the rest of the year.
I need to do this.
Same.
I'm delinquent here. I just got an email. My old employer got bought, and I need to consolidate. My 401k plan's terminating.
Same.
So yeah, I need to actually deal with this.
All right, Sean. That's our promise to each other. We were going to get our 401ks rolled over. I'll do your paperwork if you do mine.
Oh my goodness.
I have 2 kind of radical ones, which are one and the same, which is
radical. Okay, yeah. Let's hear this. Is everybody sitting down?
Yeah, sit down. Talk to your damn partner about money. Tell them how much money you have, whether you're married or not married. Not first date. I mean, I do that if I was on the date. But anyway, I'm weird. Just talk about it.
AJ's first date. She just talked about her wedding anniversary. On AJ's first date, she brings up money too. She doesn't just share that with her husband.
That's why I have a beautiful, successful for you marriage. Anywho. Just talk about it. I am blown away. John and I sit with what we've had hundreds of couples come through the door. And, some couples are super open. Some are very cards close to the chest. And most of the time it's cards close to the chest, not out of wanting to hide anything, just out of embarrassment, fear. These are all just emotions. You have to meet that person where they are. Just talk about it. Tell them what you have. Tell them what you're worried about. Tell them what your goals are. It can become such a source of stress and destroy relationships. Have a conversation is what I ask. That's my wish for everyone.
Talk to your partner about money. Talk to your parents about money. Hire a financial planner. Hire a therapist.
Oh, wow.
Shave your beard. You'll have a great year in 2023.
Yeah, hire a financial planner and a therapist. They should be different people, by the way.
Not the same person, to be very clear.
Do not hire the same person.
I know I'm dressed like Neil from the Santa Claus right now. I am the financial planner and not the therapist.
We are not your therapist. Yeah. But with that in mind, I think a lot of people rely on their therapists for money stresses, right? And therapists are not necessarily always well equipped to talking through that. So make sure that you have both. You need those 2 people in your corner.
Absolutely. Well,
anything else?
This is a wrap here.
Yeah.
I don't know.
Happy 2022.
That's it.
Let's send it out.
Cheers.
I wish I had a glass of champagne, but I don't. I have a reused Gatorade bottle that I'm filling with water.
There we go. I've got a water bottle that says NAPFA on it. Fee only planners. It's the only way to go is you're hiring one here in 2020.
To the fiduciary standard. I hope you have a fabulous fiduciary year in 2023. Well, John, it's always a pleasure. Listeners, thank you for spending a wild year with us in 2022. We look forward to lots more liquidity events in 2023. You can always reach us at liquidityevent@brooklynfi.com. You can leave us a voicemail. We have a new platform. It's called memo.fm. So memo.fm/the liquidity event. Leave us a voicemail. We'll play it on the air. Show notes for this episode found at brooklynfi.com/episode 74. BKFI stands can leave us a review if they want to be weird about it. We always appreciate that. Happy New Year, kids.
Happy New Year. Cheers to 2023.
Cheers. See you soon.